Alright, picture this. You're scrolling through your credit card statement. Maybe you're checking your rewards points, or perhaps you're just wondering where that interest charge came from. And then, it hits you, Rogers Bank. You use their card, maybe even have other services, but who exactly owns this bank? It's a question that probably pops into your head more often than you think, right? You're not alone. We're all consumers, and in today's world, understanding the ownership structure behind the companies we interact with is crucial. It's about transparency, trust, and ultimately, knowing where your money is going. Now, before we dive into the specifics of Rogers Bank, let's take a step back and consider the broader landscape. Banking, telecommunications, media, these sectors are often intertwined, especially in Canada. And when you see a name like Rogers, it immediately triggers thoughts of telecom giants, cable TV, and mobile phones. So, it's natural to assume a direct connection. But is it that simple? The answer, as you'll soon discover, is both yes and no. It's a bit of a corporate labyrinth, and that's exactly what makes it so interesting. Because understanding the ownership of Rogers Bank requires us to understand the evolution of Rogers Communications, the parent company, and its strategic moves into the financial sector. Let's rewind a bit. Rogers Communications, as many of you know, is a massive Canadian communications and media company. It's a household name, synonymous with cable, internet, and mobile services. But their journey didn't start with banking. It began with Ted Rogers, a visionary who, in the 1960s, saw the potential of cable television. He built a company that would eventually become a powerhouse in the Canadian market. Over the years, Rogers Communications expanded its reach, acquiring other companies and diversifying its services. They understood the importance of bundling services, offering customers a one-stop shop for their communication needs. This strategy not only increased customer loyalty but also strengthened their market position. Now, where does Rogers Bank fit into all of this? Well, the establishment of Rogers Bank was a strategic move to further integrate financial services into their existing ecosystem. It was a way to enhance customer value, offer rewards programs, and ultimately, increase customer retention. Think about it. If you're already a Rogers customer for your phone and internet, and you can get a credit card with attractive rewards tied to your existing services, you're more likely to stay within the Rogers ecosystem. But here's the key point. Rogers Bank is a subsidiary of Rogers Communications. This means that Rogers Communications is the ultimate owner. It's not a separate, independent entity. It operates under the umbrella of the larger corporation. However, it's not simply a matter of saying Rogers Communications owns Rogers Bank and leaving it at that. We need to delve deeper into the corporate structure to understand the intricacies of ownership. Rogers Communications is a publicly traded company, meaning its shares are available for purchase on the stock market. This means that while Rogers Communications owns Rogers Bank, the company itself is owned by its shareholders. These shareholders include institutional investors, mutual funds, and individual investors. So, when we ask who owns Rogers Bank, we're essentially asking who owns Rogers Communications. And the answer is a diverse group of shareholders. But within that group, the Rogers family, through various trusts and holding companies, maintains a significant controlling stake. This means they have a substantial influence over the company's direction and decisions. The Rogers family's control is a crucial aspect of understanding the ownership structure. They've played a pivotal role in shaping the company's growth and strategy. Even after Ted Rogers' passing, his family has continued to steer the company, ensuring its legacy and maintaining its market dominance. But why is this important? Why should you care about who owns Rogers Bank? Well, for several reasons. First, it's about transparency. As a consumer, you have the right to know who you're doing business with. Understanding the ownership structure allows you to make informed decisions about your finances. Second, it's about understanding the company's priorities. A company's ownership can influence its strategic direction. For example, a company owned by a family might prioritize long-term growth and stability, while a company owned by institutional investors might focus on short-term profits. Third, it's about understanding the company's relationship with other entities. In the case of Rogers Bank, its relationship with Rogers Communications is crucial. The bank leverages the company's existing customer base and brand recognition. It also benefits from the company's resources and expertise. Now, let's talk about the specific products and services offered by Rogers Bank. They offer a range of credit cards, including the Rogers World Elite MasterCard, which is known for its cashback rewards. These rewards are directly tied to Rogers services, making it attractive to existing Rogers customers. The bank also provides online banking services, allowing customers to manage their accounts and transactions conveniently. This integration of financial services into the digital ecosystem is a growing trend, and Rogers Bank is capitalizing on it. But it's not just about credit cards. Rogers Bank is also exploring other financial services, such as savings accounts and investment products. This expansion reflects the company's ambition to become a more comprehensive financial services provider. And as the financial landscape continues to evolve, we can expect Rogers Bank to adapt and innovate. The company's ability to leverage its parent company's resources and expertise will be crucial in this process. Now, some of you might be wondering about the regulatory environment. Banks in Canada are subject to strict regulations, and Rogers Bank is no exception. They are regulated by the Office of the Superintendent of Financial Institutions, OSFI, which ensures that they operate in a safe and sound manner. This regulatory oversight is essential for maintaining the stability of the financial system and protecting consumers. It ensures that banks have adequate capital, manage risks effectively, and comply with all applicable laws and regulations. So, to summarize, Rogers Bank is owned by Rogers Communications, which is a publicly traded company controlled by the Rogers family. This ownership structure influences the bank's strategic direction and its relationship with other entities. Understanding this ownership structure is crucial for consumers, as it allows them to make informed decisions about their finances. It also provides insights into the company's priorities and its role in the broader financial ecosystem. Now, as we wrap up, it's important to remember that the corporate landscape is constantly changing. Companies merge, acquire other companies, and restructure their operations. So, it's essential to stay informed and up to date. And that's the story, as it stands. Rogers Bank, a part of a much larger picture, a piece of the Rogers Communications puzzle. A reminder that even our everyday financial tools are connected to vast corporate structures. With that said, thanks for watching, and until next time.